morning and welcome to Radio Friends on Friday, November the 22nd. Good to have you here. ALEX LaBrunerie is with us, LaBrunerie Financial.
Good morning, Paul.
Yeah, good morning to you. Before we go any further, today is November 22nd. Today is our director, Travis McMillan's birthday. Yeah.
Congratulations, Travis.
Yeah, there he is. 40 years old today. He's not a kid anymore. He's 40 now. And that kid started with us when he was 11 years old. That's a story I like to tell.
They grow up fast, right,
They do,
Paul?
don't they? All right. So, Alex, we're coming up close to the end of the year, and you wanted to talk about charitable giving.
Yes, you know, in the recent tax laws that Washington passed, they've allowed for senior investors with IRA money, IRA accounts, if they elect to use their required minimum distributions, or what are often called RMDs, use the jargon of our industry and profession, you could direct your required minimum distribution from your IRA. So you've got your RMD from your IRA, and you can do a QCD, which is a qualified charitable donation.
Okay, let me try to understand this.
Yes.
You're 70 and a half years old, 70 and one half years of age. You have to take your RMD, which is required minimum distribution from your IRA.
Yes.
Now, if you don't need that money, or you would like to make a contribution to a charitable organization, let's say if you were going to make a contribution to a charitable organization, you can take your RMD money and have it funneled directly to that charitable organization.
Yes.
And you don't have to pay the tax then for taking that money out of your IRA that you were going to have to take out anyway.
Correct. That's right.
Did I explain that right?
That's right. You get an A+ in the ABCs of IRAs.
Okay. So that makes a lot of sense. If you were going to make a charitable contribution, make it from your minimum.
Think about, use your required minimum distribution to make a charitable donation, or what they call qualified charitable donation.
Okay.
It's important, to work with your IRA custodian, your banker, your advisor. The company that holds your IRA has to be involved in this.
So they have to do it and make that transfer directly from your IRA to the charitable contribution.
Yes. So the paperwork, signatures are probably required.
Then you're not going to pay tax on that.
That's right.
Does it behoove you to do it that way instead of taking the money out and then making the contribution yourself and taking it as a deduction?
It's easier, Paul. Sometimes it's just an easier way to do it.
Okay.
So each person's tax donations are dependent on on their income. So that's a hard question to answer generally. It does make a lot of sense most of the time.
Sure. Can you do a partial amount if you don't? And you tell them to put half of your or your RMDA. Yeah.
So if your RMD is $2,000, you could have just $1,000 go to your charity of choice,
and then you keep the other $1,000.
That's right.
And you pay tax and only on the $1,000 that you actually took in your hand.
That's right.
Okay.
Yeah.
All right. So that's something to think about.
Yes.
As we're coming up to the end of the year.
End of the year, yeah. And it'll come up fast, and 12/31 is the calendar deadline for making your RMD distribution if you're over 70 and a half.
You don't have the benefit until April the 15th to make that contribution.
That's right.
You have to take it out by
12/31. So there's time sensitive.
Okay, what happens if you forget to take out your required minimum distribution?
Well, you want to stay on top of that. You really don't want that to happen, because there are IRS penalties of up to 50% of the required amount.
Really?
Yes.
So if you don't take, if you're required to take it out and you don't take it out, you're going to have to take it out at one point, and then you're going to pay not only tax but 50% penalty on that.
That's the way the tax code works. Yeah. So it's to be taken seriously. You don't want to blow through that deadline.
Okay. Now, since we are approaching the end of the year, what about making contributions to the IRAs?
Well, you do have till April 15th of the following year to make contributions.
Right.
So if you're in an employer-sponsored plan like a 401k or 403b, you do have to get your contributions done by the end of the calendar year, 12/31.
Okay.
And
Are
the
you-
529 accounts for parents and grandparents in Missouri have a 12/31 deadline too.
Okay, explain what that 529 for grandparents are.
So if a grandparent, grandmother or grandfather wanted to make a donation to their grandchild's college savings account, they need to, and they get the Missouri deduction, they ought to try to get it done by 12/31, and they qualify for a state of Missouri tax deduction, no federal deduction.
No federal, but a state deduction.
That's right. So that's better than no deduction at all, and if it'll help the grandchild save for college.
But it has to be set up as a 529 specifically
Yes.
set aside for the grandchild or the child's
That's right.
college education.
That's right. So the popularly called the MOST plan in our state, or there are other 529 plans that are not affiliated with our state. Missouri has an open policy on those 529. So
What happens if that kid that they're setting this up for decides they're not going to go to college? What happens to that money?
the parent or the parent or the grandparent can change the beneficiary and redirect the money to another child, or withdraw the money and pay tax on the gains and a tax penalty of 10% on any earnings.
Okay,
over
so
the years.
it's better that the kid go to college.
Yes.
All the way around.
Yes.
All the way around.
Yes.
Okay. Anything else that you can think of, Alex?
I think, Paul, end of the year is a good time to look forward and balance. We'll talk about this in January, but reducing one's risks, making sure your risk is your objectives minimized. Yes.
Yeah. And as far as the long-term look at the stock market, you say
long, buy and be patient.
just let it go.
Yeah, worry about time in the market.
Don't
not
try to
timing
time the market. Don't try
That's
to
right.
time the market, because you can lose big time if you time the market.
That's right.
And maybe sometimes it's better not to look every day.
Yes, yes.
Not to look
Yes.
I tend to, when things are going well, I check it every
Yeah.
day. When it's not, I don't look.
That's right.
Because you always say, well, it'll come up. All
That's right.
If people want more information, Alex LaBrunerie, how do they contact you?
Call us at 573-449-5313.
Or you can find you on the web.
Yes.
All right, Alex
Thanks.
LaBrunerie, LaBrunerie Financial.
Happy Thanksgiving.
Thank you so much for coming by, Alex.
Thanks.